I'm making a review again a little bit early today, but November 21st, 2024. Today started out with a really big bear bar closing relatively near its low on bar one. And the thing to notice, bar two, follow through bar, right? You can see on the open, the traders sold it. So if you had set a limit order to try and sell the close of bar one, you would not have been filled. The price you'd be trying to get filled at is 59.50. And you can see we got a small gap down, so a micro gap, and sold all the way off. So really strong for the bears on bars one and two. Something else to notice about bars one and two is that they're about 50 points combined. I think it's a little bit less. No, about almost exactly 50 points. 51 points combined. And that's pretty much the entirety of yesterday's range. So whenever you cover the prior daily range in the first couple of bars, you should probably be thinking it's going to be a trading range day. The options that you get when you see bars one and two are you could sell the close of two and just take a chance that we get a bear channel down. So you get one, you get two, you sell the close of two, take a chance that we get a bear channel for the remainder of the day. So it'd be one of those days where, you sell the close and it takes 60 bars, but eventually it gets here. Sometimes that happens and you get an 100-point bear day, but it just takes forever and it's a slow channel down. But usually it's a bigger surprise than this, even if you're going to get something like that. Or, you can get a potential quick low of the day. So a sell climax on the open, and then you get a bull bar closing near its high on bar three. This is a possible low of the day. It's one of those things where is it a high probability low of the day? No, there's probably, a 30% chance, maybe a 1 in 3 chance that three is the low of the day, but it's still reasonable math to buy above three, put a stop below, and just take a chance, right? If you're doing that, you're risking 10 to 15 points, trying to make whatever, 50, 60 points. So it's reasonable to buy above bar three, taking a chance that it's the low of the day. 4 consecutive bull bars, 3, 4. So I think after you see 3 and 4, it's a lot less likely that we're going to get a bear channel for the remainder of the day. 1 and 2 were pretty strong, and they should get a second leg sideways to down. But 3 and 4 are strong enough to make me think that we're probably going to go or get another leg up back into this area. Additionally, bar 4 is right around 50%. So there's going to be some bears selling the 50% mark rather than selling the close of 2. Why would you rather sell at 50%? Because there's less risk and you're hoping that you're going to get a second leg down. The close of 2 should probably get tested. So you get 1 and 2, and then yes, 3 and 4, but the close of 2 is probably going to get tested at some point today. So some traders will sell the 50% pullback, taking a chance that we get a second leg down. 5, a bear bar closing reasonably near its low. If you sell below 5 as a low one short, well, after 3 and 4, you're probably going to get a second leg up. So it's a little bit difficult to sell below 5 and expect to make money. But you know that we're probably going to get a second leg down from 1 and 2, which means we're probably going to get below the 2 low. So you can expect the second leg to get somewhere down here. After bars 1 and 2, we are always in short, and I do not think the bulls were able to flip the market to always in long anywhere in here. I think, I'll get to that in a second. 6, follow through for the bears, so consecutive bear bars, 5 and 6. We're probably going lower. How much lower? I don't know. I think the 2 low is probably the first support area, since 3 and 4 is strong enough to get a second leg up. 7, another bear bar. Good for the bears. We're probably going, again, at least a little bit lower. I would imagine below the bar 2 low. After 3 straight bear bars, 5, 6, and 7, we should get a second leg sideways to down. 8, a bull bar. It does trade below the bar 2 low, so the bulls who bought above 3 are now stopped out. And then 8 closes on its high. Some traders would buy above 8, buy again, since sometimes the market will try and trap out the bulls and then rally. So trapping out the bulls who bought above 3 with stop below 3 and then start to rally. But the reality is it's probably, we're probably not going to go too much higher. 9, follow through, consecutive bull bars, 8, 9. So we have consecutive bull bars, 3, 4, and then 3 bear bars. Consecutive bull bars, 8, 9. And then what did we get? We got 3 bear bars. So do you buy above 9? I don't think so. I think that we're still always in short. I think 2 made the market always in short. And even on the close of 9, we're still always in short. I think 9 is one of those scenarios where the bulls need one more bar. And so if 10 looks like 9, then there's a chance that we go higher. However, I still think that we are always in short at this point. So if you're looking to do anything, you should be looking to sell instead of buy. 10, a doji bar, probably buyers not too far below, scaling in lower, but really not a very good short below bar 10. I think for the most part, since 8 and 9 should get a second leg up. 11, you can see we initially tested the bar 9 close and then sold off on bar 11. And then sold off on bar 11. So the bulls who bought the close of 9, they were hoping that 10 would look something like bar 4 or bar 9. Instead, they got a disappointing follow-through bar on bar 10. So they're using 11 to buy back their shorts or sell out of their longs up here, and then we're getting a big bear bar. Large tail on the top and bottom of 11. Followed through 12. 3 straight bear bars, yes. Probably going a little bit lower, yes. However, look at these reversals up. 3, 4, 8, 9. So should the bars be this large and closing this strong if we are going to end up getting, a couple of legs sideways, a couple more legs sideways to down? Should we be getting these large bars if we're going to get a bear trend day? Probably not. So we probably shouldn't be getting bars that are this big if we're going to get a bear trend day. So that makes me think decreased chance of a bear trend. It's also a third leg down pretty clearly. 1, pullback, 2, pullback, 3. So we have 3 legs down and then a bull bar on 13. 13 is a wedge bottom, 1, 2, 3, or 1, 2, 3, however you'd like to draw it. Either way, what's important to realize is there's 3 pushes down. So sometimes some bears will exit above 13. Not really that great to be short after that bull bar. Since it is a wedge, we should get 2 legs sideways to up, which is why a lot of bears will exit. 14, a bear bar closing near its low, but you'd be betting on a possible breakout below the wedge, which is really not all that high probability. So I'd imagine there's going to be buyers below 14, scaling in lower. 15, a bull surprise, a big outside up bar. We're probably going to get at least a little bit more to the upside here. We should get back to around the bar 9 close, and we probably should get back to around the bar 4 close, since there were some bulls who bought maybe above 4, and they've been trapped in their trade, but they probably shouldn't stay trapped because the trade was reasonable enough to buy the close. I don't think we ever quite hit the measured move. We did not. Okay. I was just checking. So I was on 16. So 16 follow through. 15, a good looking bull bar, but a tail. 16 to me is enough for a second leg up. So after I see 15 and 16, I know we're going higher. 17, a 3-bar micro channel. 15, 16, 17. And 16 and 17 closing on their highs. Increased chance that we get at least a second leg up, if not a lot more to the upside, right? The problem with buying is you're buying against a reasonably tight channel. So the move down from 1 to 12 is pretty steep. However, with these large reversals, 3, 4, 8, 9, I think it's reasonable to be long. I think 17 is what makes the market always in long. 15 and 16, I thought the context was always in long because we've had so many reversals up and we were at a wedge. But after 17, 3 straight bull bars, I think it's pretty clear that we're always in long. You can see when we flip to always in long, bulls bought the close of 17. We had a gap or a micro gap from the 17 close to the open of 18. The bulls were so aggressively buying it that any trader who tried to buy the close of 18 on or 17 on limit order was never filled, and 18 raced up even more. So 15, 16, 17, 18, a lot of good looking bull bars, and we're probably going to get another leg sideways to up. 19, a doji bar. So 5 straight bull closes, 15 through 19. Probably buyers below 19 for a second leg sideways to up. And you can see we initially got buyers below on 20. These are the kind of limit order trades that you should be taking if you're going to take limit order trades at all. Is the bull trend, you could buy the close, you could buy the close, you could buy the close. And if let's say you bought the close of 16 and you wanted to add to the trade, this would be a spot to add to your trade below 19 or a couple points below 19. You know that a trader who sells below 19 is probably going to lose money. 20, an outside down bar, good for the bears. Probably buyers below, willing to scale in lower. I don't think that this is a very threatening bar. Bad low, 1 short. Bears hoping some sort of double top, but it's really not all that good. Outside up bar 21, probably sellers above, but it's an OO pattern 2021, so 60% chance of some sort of measured move up. 22, an inside bar. Bears are hoping it's a double top 2022, but there's going to be buyers below 22. It's not a very good short. Yes, it's a second entry, but we're in a tight trading range, 19 through 22. And tight trading ranges usually get trend resumption. 23, a bull bar closing near its high. We probably haven't pulled back enough from 15 to 19 in order for us to go a lot higher, but some traders will still take the buy. 24, consecutive bull bars. Good for the bulls, probably going again at least a little bit higher. 25, another bull bar, probably buyers below, scaling in lower. This is a third reversal down. So the first reversal down, 19, and then 20, 21, 22. Second reversal down, 22, should be buyers below. Third reversal down, 25. So you could argue some sort of wedge, but it's not a wedge that anyone is going to sell. So probably buyers below 20, 25, scaling in lower. 26, a big bear bar. 26 is big enough for a second leg sideways to down, but I think that the best the bears can get is to the bottom of the bull channel or the bottom of the wedge, which would be the bar 21 low. So they might try to trade below 21 by a tick or two. It's not really great to have your stop down here yet because it is the bottom of the bull channel, and we might test it and then bounce. Same way that we got another spike and then a pullback and then a small bull channel 42 through 49. And then we pulled back to the 42 low on 58, and that's where we bought. So as I was saying, 26, a bear bar, that's going to need a second leg down. There's a tail. You know that we should get back to the bar 25 low. 27 rallies back to the bar 25 low. Some of the bulls who bought below 27 or 25 were disappointed with 26 and are using 27 to buy back or to sell out of their longs. So that's probably what's causing 28. 28 enough to get a second leg sideways to down. An inside bar 29, a high, you could argue it's a high one. I see 27 as a reversal attempt up, and then this is a second reversal. But you could argue it's a high one or a high two. It's a 4-bar bear micro channel, and it's a pretty tight channel from 25 to 28. We probably should not have rallied straight up from 32, but it was since the channel down was pretty tight, but bulls ended up being pretty eager to buy. So 29, like I said, inside bar, probably sellers above, and sellers above during 30, but buyers below. 31, third leg down, and around the bar 21 low, where there's going to be buyers anyways. So probably better not to be selling here, better to be buying if you're doing anything. 32, a bull bar closing near a tie. It's a wedge bottom, so it's 3 legs down and a double bottom with 21. You could argue 40% chance breakout above the 25 high and a measured move up, but I think the channel down is pretty tight. So instead of buying directly above 32, I'd probably wait to see if you get follow through on 33, 34, 35, which you do. So you can add on any of those closes if you were long. 33, a bull follow through bar, but tails on both sides. So I am expecting a little bit more to the upside, but I'm not sure how much more without a pullback. I am still overall bullish. I think the rally from 15 to 25 needs a second leg up, but I'm not sure how much higher we're going to go. 34, another bull bar. So big, small, big, 32, 33, 34. But again, still expecting a second leg sideways to up. 35, another bull bar, a tail on the top, but getting stronger, right? 4 straight bull bars probably shouldn't be happening if this tight channel is going to get a second leg down. So there's going to be buyers below anything we trade below here. 36, another bull bar. So 5 straight bull bars, 30, 32 through 36. Large rally, and you can see the bar size is increasing. When the bar size is increasing, it means we're probably going to go, or it's parabolic by nature, but again, we're still probably going to go at least a little bit higher. 37, another bull bar, good for the bulls, but not as big as it could be. We're going to go above the bar 1 high though and break out above the 18 bar range. 38, a doji bar, again, still probably going higher. A bull micro channel from 32 to 38 at this point. So 7, 8 bar micro channel. We're going to get a second leg up. 39, another bull bar, parabolic, and breaks out above the bar 1 high. 40, doji bar, probably buyers below, probably sellers above. 41, another doji bar, so consecutive doji bars, 40, 41. Again, there's probably buyers below 41. We have such a large micro channel from 32 to 41 that you'd expect there's buyers below willing to buy for a second leg up. 42, buyers below 41. So there goes the protection of the micro channel, but it was still a 10 bar micro channel. So we're going to go above bar 40. 43, a bull bar, doji bar, probably buyers above, probably buyers below, probably sellers above, scaling it higher. But again, it's a bull channel, right? It was a wedge open in a bull trend. So this is, you can classify it as a sell climax open and then a bull trend. You can classify it as a wedge open and a bull trend, really whatever you want. The important thing to notice is that once we clearly flip to always in long, I think the bulls don't get the always in flip until 17. And then once they get 17, we're always in long, and we remained always in long the remainder of the day. I don't really think there's much the bears can do to flip the market to always in short in the next 2 minutes before market close. So I think it was on 45 or 44, another bull bar, tail on the top, probably buyers below. 45, large tail, so you can see the traders who sell above 40 and are willing to scale in might make money. 46, buyers below 45, and then 47, an inside bar, possibly a wedge, 1, 2, and then you can see we formed the third leg of the wedge. And then you can see, I'm going to skip through a little bit here. I plan on making a live trading video tomorrow, and I will, there will be no daily review tomorrow afternoon as I will be gone. But we have 3 pushes up. It's important to notice that this is the wedge channel, and 3 pushes down, 1, 2, 3. And you can see that's why traders bought this close. There's 3 pushes down. But the bar 42 low, the bottom of the bull channel, is going to be support. So there's going to be traders trying to buy this area for at least bounce. And that's why we got such a big bounce on 59. Do you buy above 59? No, I think this is more traders buying the bottom of the trading range, and that's causing the bounce. So that's why, as big of a bar as 59 is, it's not going to get really good follow through. And that's why, as good as this looks for the bears right now, what are the odds that this next bar, so whatever the next bar is, what are the odds it's a bear bar? Probably, honestly, not that great. They might get follow through, but I think what's far more likely is that there was support here, there was support here, and we've been in a trading range. It's probably going to remain support. So Yeah, and they could get a follow through bar, but there will be limit order bulls buying right here, as we speak, as this bar closes, trying to make sure that bar 79 is a bull bar. You can see they're buying it up right now. So you did get a little bounce. But anyways, so like I said, probably traders not really willing to buy above. Sorry about that. That was the bell. Not really willing to buy above, but more willing to buy down here and then scalp out. So that's why there was a lack of momentum to the upside. Then we got to move down. Again, probably buyers somewhere down here. The entries for the day, I thought, you can maybe sell below 1. I thought you could buy above 3, low probability, but reasonable. I probably would not buy above 8 or 9, kind of difficult until 17, maybe 18, probably 16 as well, 23, 24, then a wedge pullback. I probably personally would not buy above 32, but you could buy the close 34, 35, 36, 37, 38, 39, all for expecting a second leg up. But the problem is when you get a sell climax on the open, like we did on 1 and 2, it's usually difficult for the market to get a ton of follow through to the downside. When you get a sell climax in the open and then a bull channel, it's often difficult for the channel to get too far above the high of the day. So although we were likely to reach the high of the day, we probably weren't going to go super far above it. The daily chart. A bull bar, you can see we rallied up to around this low. I'm not sure we touched it. 59.8675, 59.05, or 59.85. Okay. So we missed it by like a point. But for a daily chart, that might be considered tested. But anyways, we're trying to test up in this area. I haven't been, I'm not trying not to make these videos super long anymore because I try to spend my time just studying breakouts and thinking about them a lot. But so that's why these videos have been and probably will continue to be a little bit short. As I've mentioned before, eventually this channel will purely be live trading. It probably won't be for a couple of years, probably like a year, maybe a year and a half before this channel will just be fully live trading videos and nothing else. But anyways, the monthly chart, a big bull bar, a tail on the top. But again, we got 9-10 days left. But weekly chart, as I was saying, you can see we're getting a bull close, looks like. So tomorrow, the bears have a chance to try and change that. But the bulls are going to try and get a rally back up into this area. So it's just a high one buy for the bulls. Although the 11-11 week should get a second leg sideways to down. Again, it's important to understand why, I'm just going to leave the Globex on. It doesn't really matter for this. But it's really important to understand what's going on in this, in that it's a trading range, right? Let me just grab a sip of water. Yes, the trading range might have started down here, but it's important to think about the market cycle in that when we get the bull spike, if you take nothing else from this video, take this away from the video. When you get a bull spike, like a big micro channel like this, and then you trade below, like we do on 42, once you see 42 close, you should immediately start to think that's the start of the bull channel. And in essence, what you're saying when you say it's the start of the bull channel is you're saying it's probably the start of the trading range. So if this is the start of the bull channel, it means it's probably actually the start of the trading range. Does that mean we're going to go sideways immediately? No, it means we're probably going to get a couple more legs sideways up and then test back into this area. So that's why you cannot sell down in this area, because it's the start of the bull channel. And so there's probably buyers here. And again, that's why it's really not great to sell this close, because as I mentioned, there's probably buyers here because of all this support. The bears need one more good looking bar, and then they might be able to flip the market to always in short. And that's why they're probably not going to get it. What are the odds that you sell this close and you put a stop up here and a limit order down here? What are the odds that your limit order gets filled before your stop order? Probably not super great, right? Probably relatively 50-50. If not 60%, you get stopped out. And it really all comes down to this bar. And that's why this bar is hesitating so much, is because if you're selling, first leg down, pullback, second leg trap, and you know that there's going to be buyers in this area on limit orders, just buying the close of this bar, basically betting against a follow through bar. All right, that is going to be it for this video. And yeah,